And I think that is something that all traders deal with. How do you hold a trade? And we know what we need to do, right? That's why we use EMAs. And honestly, at the end of the day, we can decrease and increase our time frame to reduce our risk or increase our risk. Okay, and I'm going to show you that here in a second. All right, so just bear with me as we look through this morning's trade. So on CHWY, looking at the PMZ, we already had this on the radar. And that's what I talk about. Like, pick your names that you want to trade for the day, and then you're going to pay attention to them on a smaller time frame. And that's where the trendy indicators for PMZ come into place, right? The PMZ, the line in the sand, if you like to use that. We make the line in the sand free because at the end of the day, line in the sand is cool, but I'm not going to. It's a good target, and it's a good rebound area. But I'm not going to make any major choices off the line in the sand. It's just it's like this foundation for me. I prefer to use it with futures trading. Okay. So get past that. What we're looking for this morning is you want to look at the last couple days. And this is what made me interested in CHWY this morning. Okay? And when you look at it, we had a nice little push up. And you could see that. And then we just kind of went sideways. Okay? And so we notice here that we came up into the trendy edge and we resisted. Okay? That's normal. Notice down here at your higher trendy edge, we found support. That's normal. Every time we reclaim that edge, we found support and then we pushed up. And then notice we found resistance. A little bit of consolidation over the last couple days. The name's been pretty quiet for a long time. So therefore, we are going to look to trade this to the upside once we get a break. And intraday, I'm looking at the PMZ, or what we call the pre-market zone. And as soon as price goes over this, we're looking to take the trade. So just for visual effects, let's go ahead and use the replay really quick. Okay, and we'll slow down the speed. All right, and then we're going to place these about right in here. Just like that. We're going to scroll this over. And notice it says CHWY on watch. We take on bids over the pre-market zone. And the PMZ is going to come up, and you'll see that. All right, let's go ahead and hit play. And you're going to notice that as soon as we start to open, the PMZ starts launching. That's what this blue line is here. Okay? So we're taking the trade over that, but the big question is, like, how do you stay in this trade, folks? How do you stay in the trade? Well, you use the EMA. The EMA is basically just a indicator that is free to a lot of traders, right? We have it a little bit more advanced because we have buy and sell signals inside there. But the idea is to stay long above that EMA as long as price is closing above the EMA. All right? And so what you'll notice is price is staying above there, but we are creating divergence. Okay? So if you notice here, and we'll just pause this for a second, is that we created this divergence. And what I mean is the space between price and the space between the EMA. Okay, down here it's really not that bad. It's not that bad. And by the way, this is a buy signal on your trendy indicator. And then here, obviously, we get this huge spike out of nowhere, right? And some of you guys got filled. Boom, it worked. It's great. And this is kind of like that first indication that we could have a pullback. All right. So this is abrupt. This is what I would call a chaotic candle, a big topping wick. So it's important to just take a little bit of caution after that. But notice once we pull back, we come right into the EMA. Now listen, I say this over and over. ATR, are you listening right now? So if you are on, this is, I always give you credit on this because you brought it to my attention and you made me really think about it. And I noticed, I think when you first started, you were taking losses because you weren't committed to the time frame or the candle close, if I do recall right. I could be wrong, and I apologize. But what we found and what I found was just by watching members is that they weren't committing to the close. Okay? So once they saw something like this, they were getting scared out of their trade. But once they saw this and then they start to see this, they were then very irritated because they closed their position too soon. Now you can program this in Thinkorswim to close a position when a candle, and you create the select the specific candle that you want to use. So say in this case we're using a 5-minute candle. So in Thinkorswim you can actually create a order that says I will close this position only if a 5-minute candle closes underneath that EMA. Okay? So what happens right here, it tested, but it did not close under the EMA. And then you find yourself, oh man, now we're pushing right back up, right? Now, I will tell you as a disclaimer, the only part about that I'm not a big fan of is that in a 5-minute candle, look at this 5-minute candle, folks. In a 5-minute candle, anything can happen. Matter of fact, this was running around 71.60 and then pushed up here towards 74.5 in a matter of 5 minutes. So just like the upside can happen, you could set this at saying, hey, I want to get out, or even mentally, you can say, I'm not getting out unless the candle closes under the EMA. You could set yourself up for a heartbreak, okay? Because this candle could do something like this in literally 5 minutes. You guys feel me? You hear what I'm saying? So it's up to you. If you're watching and managing this, I feel like it's easier. If you just set some sort of conditional order that says a close under this, you could find yourself at a disadvantage because you could be in options up here like this morning, right? We took this at, let's say, 60 cents and it went to probably 4 up here. I don't know, probably pretty close to $4. And then all of a sudden you come back to your screen, you find out you didn't get the 4, and now your 60-cent option is now turned into 10 cents. Now, you look at that, and then you look at this, and you're like, dude, I can't believe that happened. So let's go ahead and fast forward here and keep hitting play, and you'll see how price is reacting off of that EMA, right? And this is where we are currently. Now, from a Fibonacci standpoint, you can come up here and select your fibs, and we're going to use this entire trend like I always show you guys. Okay, so this would be the peak, and right down here on open, this would be your pivot low. So I'm going to grab these fibs. I'm going to measure, just like that. And I want you to see the confluence also at the 38.2. Okay? Now, above the 23.6 is extremely bullish. So right now, what I'm gunning for is if we can get over this, then I think we can get some more momentum on CHWY. Okay? This is basically like a car if you were to think about, you're out on a motorcycle or a car and you just rev that thing up to, 11,000 RPMs or something, and the engine's getting hot. It's time to cool that engine down, and so that's what's happening here, right? This is your pit stop in here, and you're just kind of like letting things cool down, and you're trying to get rev back up for later in the session. And for me, that can happen over the 23.6. So again, staying in the trade is crucial, and trying to stick to a plan. Now, what if another thing that you could do is understand the delta of your option. You could start with a delta 30 and all of a sudden your delta is at 80, meaning when you bought it, for every dollar that the underlying equity moves, you are going to gain $30. And then all of a sudden, gamma and everything else squeezes, and now you're dealing with a delta 80. So for every dollar, you could lose $80 or make $80. So you have to take that into consideration, because if you look at the EMA right here, you can see that it's at $72. and current price is sitting at 72.50. All right. So let's just say it's a 80. What this tells me is if price were to come back down here, my option could lose roughly $40. So it's about 50 cents to the downside here. So you just take half of that delta, which would be 40, because I said 80 delta. You could lose roughly about $40 per contract. So you have to think to yourself, am I okay with that risk, or do I want to lose that many profits, right? If you're okay with that risk, that's fine. If you're not okay with the risk, what you do is you just decrease the time frame. And what happens is if you decrease the time frame, right, then you can come down here. Not that I would ever probably trade a 3 minute, chart, but what happens is the EMA gets tighter. See, and now you could change your risk and say instead of a close under the 5 minute, I'm going to make my rule 3 minute because now my delta 80s would only be losing say $20 per contract if we close under there versus 40. Okay, so just up to you. But that's how we can decrease that risk is by decreasing the time frame, but applying the same methodology. Okay. All right. So that's what's going on there. And notice we're just going to kind of hang out in here. We'll go ahead and create an alert that is above this 23.6. So I'm going to create, let's see, I think because this is in the way, let's see, it's around 72, 71. Right there. Okay, just like that. All right, so we'll put that away, minimize that, and come back over here to the ES futures. Just a quick update. So hopefully that helps you guys. I hope it does. We'll check back in here a little bit later.